let's get started. There's more people joining, but let's crack on in the interest of time. We have a lot of interesting content to get through. So welcome everybody to this month's webinar, which is all about growing brands through smart operations. Clearly, it's becoming more important all the time for brand owners and aggregators to be focused on operations, given the difficult headwinds that we've been seeing. So we thought we'd focus in on this and get some experts from operational experts from the aggregators to drive today's webinar. So in terms of the agenda for today, we're going to kick off by surveying you. I'm going to do a live poll to get your thoughts on what future topics you'd like us to do webinars on. I'll then give a brief update from the Fortia Group. We'll hand over then to presentations, 4 7-minute presentations by aggregators, and then we'll have lots of time for audience Q&A. As we go through today's webinar, please do submit your questions via the Q&A button on Zoom. Do not submit them via chat function, or we won't answer them. Thank you. So let's jump in. So all of the previous webinars that we do here at the Fortia Group are available to download. They're all recorded. The materials are available, as well as the actual recordings to watch. They're all available via the fortiagroup.com. We've covered great topics over the last few months. In March, we did a dedicated topic to LOIs, letters of intent. Back in February, my favorite one, we interviewed 10 sellers who exited their businesses successfully to learn their war stories and tips for future sellers. Back in January, looking ahead to 2022, we talked about is this year the right time to sell your business, and so on. So there's some great content all available for you all via our website. Going forward, we want, rather than us coming up with the topics, we want you to decide the topics. So we'll launch a live poll in a moment. Here are some of the suggested topics we believe might be of interest to you. One, navigating the supply chain. Clearly, there's lots of headwinds there. It's getting tougher and tougher. Would you like to hear from the supply chain experts at aggregators on giving their tips and advice on how to navigate the supply chain? Profiting from technology and data, using tools, data science. To me, the best Amazon operators are what I call data ninjas. And so I don't think by any means a lot of or most Amazon FBAs are using data to its full extent. So is that topic of interest? Survey of M&A professionals at aggregators. We did that last October. I think it'd be great at some point during this year to reissue that survey to get a pulse for what the M&A folks at all the aggregators are thinking in terms of deal flow, valuations, etc. Top right, revenue-based financing. We work with a lot of clients that aren't ready to sell today, and they often look to revenue-based financing to help their growth. Would it be helpful to do an overview of that topic and bring in the best providers? Interviews with sellers who exited. Again, we did that last February. We can do that again over the coming months if people found that helpful. And then maybe in a few months' time, clearly there's a lot of noise in the market about the aggregation space. There's some aggregators in distress. Personally, I think that's to be expected. If there's 100 new startups in any sector, there's going to be some distress. But I think in a few months when that settles down, it'd be good to have a webinar, maybe with the CEOs of aggregators discussing the future of the space. And of course, if you have any other topics, please let us know. So I'm going to start the live poll. Just give me one moment. Okay, so I'm going to give 1 minute for people to submit their preferences. Thank you. Okay, just as the last results are coming in, it looks like it's the top two. It looks like are the most preferable webinar to discuss the future of the space, and secondly, how to profit from tech, tools, and data, which is interesting. Let me end the poll now and share the results. Can you see that now? Yeah, yeah. So that's great. Thank you for that feedback. We will also send out a similar poll to our entire database for lots of our clients that couldn't attend the live webinar, and we'll triangulate both polls and then use that to drive the agenda for the next few months. Thank you. Okay, so wanted to give you a brief update from the Fortia Group. At Prosper in March last month, we announced 2 new solutions for our clients. So I just want to recap on the different solutions that we offer. The first is we advise e-commerce entrepreneurs on their exits. We have 7 exits launching in the next month, and I'll walk you through those very briefly in a moment. And we also have 7 clients in our exit ready program. So a lot of our clients don't want to exit until, say, the second half of this year or 2023 or even 2024. And for select clients, we welcome them to a program which is designed to ultimately maximize their payday when they press the green light on an exit. We announced that we have started to advise aggregators on their corporate finance needs, whether that's equity and credit financing, M&A, either sell side or buy side. We're currently in the market with 2 seed rounds of aggregators, one dedicated to China and China FBAs, and one dedicated to acquiring brands on Eastern European marketplaces, eMag in Romania and Allegro in Poland. If those are of interest to anyone on the call, please shout. For larger deals, we have the ability to bring in an investment bank, some of my former colleagues, to do sort of 100 million plus financing deals. And we've already had our first few pitches in that regard. So if the aggregators are planning financing this year, please do reach out and we can give you our market intel. And then very excited with our third offering that we announced. We've launched the only investment syndicate worldwide that specializes in aggregators. This week we closed our first deal. We did an investment into an aggregator that buys distressed Shopify brands called the Hedgehog Company. And next week we're launching a deal, this week for Gravitique. It's a niche FBA aggregator set up by 2 doctors. They're the co-founders, and the focus is on the medical category. So really nice niche focus, and its 6 acquisitions are going very well. If any of that's of interest, please email me direct at emmett.kilduff@thefortiagroup.com. So finally, just want to very, very quickly touch on the 7 deals. We're very much in the market where we've got great flow. We are launching 2 DTC exits. eVelo, a US e-bike company, went live last week. We're launching more of a strategic acquisition for an aggregator of a business in China that could be a strategic platform for an aggregator. We're in the market with in a few weeks' time with Zonbase, a fast-growing SaaS tool for Amazon sellers. I'm sure lots of the sellers on the call know that firm. We have 2 notebook companies coming to market, Beachmore and Panda Planner. And Base Roots is a home decor brand that will come to market in maybe 1 or 2 weeks' time. So we're in the market. If any of those brands specifically interest you, please do reach out so I can make sure you're on our outreach. Okay, that's it from me. I want to hand over now to 4 brilliant presentations we have by real operators of brands. And we will ask Acquco and Christine to lead the way. Over to you, Christine.
Thanks, Emmett. Hi, everyone. I'm Christine. I lead the brand management team at Acquco, where we buy, manage, and grow brands with a technology focus. My role is to grow the brands that we buy post-acquisition. A little bit about me: I've spent my entire career as an omnichannel merchant, started as a planner for private label kids apparel at Target, and my most recent role was as an omni-channel buyer for a $1 billion P&L at Walmart. I'm really excited to sharing my ideas with you today. We can move on to next slide. Okay, before we get into some of the solutions to help sellers grow, I want to first start with a bit of an industry overview. In the past 2 years, we're seeing that customer habits have changed and how they spend money have changed with COVID as the main driver. Dollars that we're seeing traditionally went to experiences are moving to physical products, and more of that demand is shifting to e-commerce as a result of COVID-19 as well. As a result, you're also seeing that big CPG companies are leaning more into e-commerce, and especially Amazon with higher ad budgets. You're seeing Amazon Basics is growing and taking market share with some of the lowest prices in the category. And you're seeing more sellers enter each of the categories within Amazon, trying to take advantage of the e-commerce boom. And many of those sellers are selling duplicates of the same product and saturating a category where the main competing factor is price. So the spike in demand is raising selling costs both on platform and off platform, and that's where most of our headwinds currently lie. On Amazon, we're seeing that there's a rise in PPC costs and FBA fees increasing with the most recent 5% fuel and inflation surcharge. And off platform, we're seeing a plethora of supply chain headwinds with a lack of supply and raw materials and transport leading to price increases in all areas of the logistics value chain, and also with too much demand leading to longer lead times. And as we're moving away from COVID, we're seeing already that in a lot of categories, the demand isn't quite what it was in 2020. There's still more demand than pre-COVID, but the market share to ASIN ratio is a lot smaller with the increase in saturation of competition. And there is, much more competition now than we saw 2 years ago. And because the Amazon market is much more saturated, you're not going to find the same success you're used to seeing sourcing an undifferentiated product from a platform like Alibaba. So we're going to focus on how to transition being a product source with the customer to really building a sustainable brand with the 5 main tips that you see here. First, setting a clear strategic and financial plan. Second, establishing your brand identity. Third, investing in information. Fourth, mastering the fundamentals. And then 5, expanding into other sales channels. Next slide. Okay, so starting with your strategic plan, this starts with having a clear customer value proposition. Why is someone buying your product versus other similar products? And you may not have a clear value proposition right now and need to build one. You can do that by looking at some of your strengths and opportunities compared to the rest of the market and evaluating what's the current draw of the products that you're currently selling right now. Could it be unique graphics? Is it because you have a patent on the design of the product? Could it be more reviews and higher star ratings because you enter the category earlier and you have a great relationship with the manufacturer and you can focus on quality? The answer that you want to shy away from here is because you have the lowest price. That's generally not sustainable. You're not going to have the economies of scale as an independent seller compared to a CPG or Amazon Basics or even a manufacturer to sustain that. So build your strategy around your brand's true value proposition and educate your customer on this through content and ads, and expand your brand portfolio based off of whatever value proposition you decide on. After you nail down your strategic plan, you want to move on to thinking about your financial plan. And the further advanced and more detailed your financial plan is better. Planning in this stage is especially important for combating external forces like the supply chain headwinds we're seeing. Factories, freight forwarders, all of the other players in this space, they're looking for stability as well. And right now, more than before, they're willing to enter in more long-term agreements and can better accommodate you if you know what you need in the future. So the further out you can plan in advance and give visibility to your partners, the more stability your business will see in the long term. Moving on to the next slide. After you secured your strategic value proposition, the next step is to establish your brand identity. And I think this is the biggest low-hanging fruit that I see among sellers. First point of this is registering for Amazon's brand registry, where all you need is a pending trademark, which only takes about 1 to 2 weeks. If your brand name is too vague as you're registering, you can try for design trademark, and IP Accelerator is really helpful in getting that set up. With brand registry, you have an access to multiple tools that help you grow your brands. Brand analytics is one of my favorites. It's one of our tools that we use for keyword research, the ability to add A+ content to tell your brand story. This is only available if you have a brand registered brand. And then my personal favorite is sponsored brand campaigns, especially in video ads. Just the movement in the video catches the eye. It plays automatically on the product search page, and you can tell your product story without ever having the customer click on it. This is very underutilized among the seller space and usually has very high ROI. After you've established your brand trademark, another important thing to do is to create a brand voice guidelines, which will help keep your brand image consistent and make it easier to scale when you're thinking about designing physical digital updates. This includes a few things like color palette, typography, iconography, just to keep the messaging for your brand consistent. There's over 2,000 Pantone colors. So if you're just looking at a shade of blue, it's really easy without this to tell a more messy message than you want to portray. Moving on to the next slide, going towards how we can sustain the momentum of growth, right? One of the main factors is mastering the fundamentals, and this is extremely important. Losing grip on this can really erode your customers' trust in your brand and can leave a lot of money and opportunity on the table. The key here isn't just to have a checklist of things to do, but to constantly be revisiting your fundamental product maintenance strategies based on how the market is changing and the customer is changing. A few examples of this, right? With demand and forecast planning, if you have a high repeat category and huge subscribe and save base and you've gone out of stock, customers are going to a competitor and it's going to be really hard to get that customer back. When it comes to quality control, right? If you are not keeping a good eye on your QA and your suppliers cutting corners, you could lose your visual star rating or drop your visual star rating. And this could also lose you a lot of customers in this space. A few other examples when it comes to customer service. If it's not clear how to use your product, if you don't have good customer service, that could cut into your return rates and grow your return rates. And now that shipping is increasingly more expensive, it's good to continuously QA your products. You may be able to save on packaging and make that more efficient and save on shipping in the long term. So these little things, they may seem, smaller maintenance tasks in the short term, but they add up. And these are just a few examples of how mastering the fundamentals could really either help your brand grow and help customers recognize that you are a dependable, reliable brand, or it can help customers really lose trust in your brand and really erode your brand equity. Moving on to the next slide, investing in information. This is an investment in technology, but it's not just a monetary investment, it's a time investment too, in terms of how you're tracking, learning from your information and learning from what works and what doesn't work. There is so much information out there that can help you make informed decisions as a seller before doing big investments like launching a new product or significant content updates. A lot of A/B testing tools out there, crowdsourcing opinion tools. You can build and utilize your customer list by adding an insert in the product and reaching out to them for their opinions. All really good tools to help you understand big decisions before you go out and execute them. Also tools that are helpful with keyword research, understanding the market size, competitor research. Definitely take time in gathering that information, creating standard operating procedures of how you dice that, and record your learnings. These tools are very helpful, but not perfect. And there is an amount of time that needs to be put into really getting comfortable with them and learning these tools. But if you're recording your learnings over time, you'll recognize that there's a pattern in terms of what works and what doesn't work for your business, and it can help you refine your SOPs for the future. Moving on to the final pillar, considering other sales channels. So although the US market is the biggest channel, Canada, EU, and UK are super low-hanging fruits, often with less competition than the US. And you're not starting from zero because you can migrate your listing reviews over. These are opportunities that you should definitely consider if you haven't already. Additionally, something that's not so much talked about, but a very feasible channel to go into is additional retailers like Walmart.com in the US. A lot of other retailers or traditionally brick and mortar retailers are investing really heavily in e-commerce with their own versions of FBA, with their own versions of AMS. And some of them also come with direct personal merchant support. These platforms generally have less competition, and a lot of these brick and mortar retailers also sometimes use e-commerce as an idea proof of concept ground before testing their product in store. And if you get your product in store, you're going to be saving on the pick, pack, and ship. You're going to have a lot more scale selling to a store like Walmart, where there's over 4,000 nationwide. And that's a great way to diversify and also get your brand out there. So to wrap everything up, despite the headwinds that the industry is facing, there's still a ton of opportunity. Focus on building your brand and focus on operational excellence. A product has a much higher chance of being obsolete in the future than a well-marketed brand. Focus on growing your brand's value proposition, think with the customer in mind, and you'll be able to adapt and face these challenges as they migrate in the future. Thanks, everyone.
Brilliant. Thank you, Christine. Great start to the 4 presentations. If people, again, have questions for Christine when we get to the panel at the end of the webinar, please submit them via the Q&A button. Great. So next up, we have unybrands. Are you there, Taha?
Yes, I'm here. Hey, hi, everyone.
Great. Over to you.
Thank you. Thanks, Emmett. It's nice to meet you all. So starting off with a little bit about myself, my name's Taha. I've been with unybrands for just over 6 months now, and I lead up a growth and marketing team here. So that looks both at Amazon as well as our Amazon channels. And I'll maybe start off with a bit of an introduction about unybrands. So over to the next slide, please. Unybrands was founded in 2020, operated in stealth for the first few months as a few other aggregators did while we secured our funding and got the initial team members on board. Made our first acquisition early 2021 and have grown significantly since then. Our geographic footprint remains North America and Europe, but we have team members spread out all over the world at this point. At the last count, we were at 70 plus full-time employees. This is as of a couple of weeks ago, and I know we've grown considerably since then as well. Moving over to the next slide, please. Our focus, as with many other aggregators, remains on Amazon, but we do have quite a few brands in our portfolio that have a sizable D2C presence and are also distributing on other sales channels. So similar to what Christine mentioned, it's almost become a bit of table stakes, I would say, for Amazon sellers to kind of hedge their bets across a few different markets and sales channels. We do have a category focus. As you'll see here, these are the categories that we operate within, and it's a pretty even split between hard goods and soft goods. Each category has its own dynamics, but running an Amazon business isn't that much different between different categories. Over to the next slide, please. So yeah, moving over to kind of the focus of my presentation for today, we just really double click into driving growth for e-commerce brands, and a good place that I always like to start with is tenets. These kind of serve as your guiding principles, and especially are helpful for me in particular when I'm kind of into the weeds of your sort of day-to-day decision making, and these just sort of act as a good compass to help you make some of those tough decisions. Always like to start off with articulating what value you're delivering to customers. As a marketer or growth professional, you always want to make sure that that's what you're anchoring your messaging to. Product design, most of your business would have some sort of a link through to delivering value to customers. The second tenet that I like to set for myself and my team is to make data-driven decisions. As a marketer, you always want to kind of rely on your intuition and your the creative juices and that side of your brain. But I've been proven wrong enough times to know that intuitive, creative decision making is sometimes counterintuitive, and it's always a good idea to rely on data and test where possible. Another important tenet to delivering sustainable growth, in my opinion, is to build feedback loops and iterate along the way. We'll get into this a little bit further into the presentations, but I can't stress how important this is. And then leveraging automation to scale. I'm sure everybody on the attendees list here knows how hard it is to run an e-commerce business and how many tasks that you do are manual. Always looking for opportunities to automate workflows, leveraging all the amazing tools that are out there to drive automation is key to ensure that you're achieving scale. Next slide, please. So getting into launch tactics, getting a launch right is obviously a very important component for any e-commerce business. I'm going to focus most of my commentary on Amazon, but I would say the principles apply to other sales channels as well. Ensuring a good place to start is always with content. Content remains king, right? So your listing has to be keyword optimized to start with. We've all probably seen a bunch of listings on Amazon that are stuffed with keywords. So it has to be a healthy balance between keyword relevance as well as copywriting for readability, which will eventually lead to higher conversion. Content doesn't stop with just the copywriting. You need to get your imagery and videos right, as well as your EPC and brand content. As Christine was also mentioning earlier, consistency is also key. Across your product portfolio, across any brand collateral that you have out there. There are a host of providers out there that the range of services that you can get is from like your cookie cutter, standard Amazon product photography all the way to concepting and design. And for each brand owner, it's kind of up to you to find out where that calibration lies for your brand along the way. But making that upfront investment is definitely key to getting the launch right. Review velocity. I'm sure we've all heard about the Amazon sort of honeymoon period that you have when you launch a product on Amazon. Getting a critical mass of reviews is key to ensuring that any EPC and traffic driving initiatives will pay dividends down the line. Amazon provides a couple of white hat tactics to drive review velocity through the buying program and request a review feature. There's also some white hat providers out there that will, for a fee or provide traffic to provide influencers and others that will go on and review products. Getting pricing right, very key, and making sure that price deviations are measured. It is also important, and then making sure you have a full funnel PPC strategy. And then last but not least, driving external traffic. This is becoming increasingly important and always a good measure to understand how much the Amazon algorithm values external traffic is that Amazon offers a brand referral bonus now for any sales generated through external traffic sources. Next slide, please. Getting the launch right is only one half of the equation, making sure that you're doing this. The marketplace is evolving, the competitive landscape is evolving, making sure that you're doing consistent keyword research, doing competitor and category analysis, doing as much experimentation as possible, and making sure listings are continuously optimized is also key. Next slide, please. And then, last but not least, making sure you're operationalizing as much of your workflows as possible, getting your branding and style guidelines documented. It does take a lot of time, sort of upfront, but it pays huge dividends down the line. Getting automated workflows, whether that's a keyword research tool delivering an automated report to your inbox and saving yourself 15 minutes every week over the long run, it's going to be instrumental. And then using some of the amazing tools out there that automate PPC management, data analysis, the myriad of sort of things that need to be measured. There's so many great SaaS tools out there that for a low monthly fee will get you the same kind of power that a large organization with multiple headcount would. That's all I had to cover today. I'm looking forward to Q&A later.
Thank you very much, Taha. Again, please submit your Q&A for Taha and the other speakers, and we'll get to it later on. So without further ado, we'll move to our next speaker. We have Jared from Boosted. Over to you, Jared.
Great, thank you. So, hey, everybody. My name is Jared Orkin. I'm the VP of Platforms for Boosted Commerce. I've been selling on Amazon for over 8 years, and I'm really excited to talk to you today. Some background on Boosted. We were founded in 2020. We have over 130 full-time employees. We've acquired over 40 incredible brands, and our headquarters is in sunny Los Angeles with employees, of course, spread across the US. So I just want to explain a little bit more about Boosted before we begin. We acquire e-commerce businesses because our goal is to unlock their extreme untapped potential and rapidly scale them through our operational excellence, the investment we've made in automation and technology, and some of that we'll cover here today. So as you can see on this slide, we're going to start with a case study. So why don't we go to the next one, the next slide. And so we're going to start with our brand Flyby here. And as I go through this, please feel free to ask me questions. We're happy to help. So there's multiple, I'm sorry, can you go back one slide for a second? Different order here. Can we go to the next slide? Keep going, one more. Let's keep going. Let's see where, one more. I think we're missing one in the beginning, but it's okay. All right, well, can you go on one more? Let's keep going. I'll tell you when to stop. I think we're missing one in the beginning, but that's okay. All right, let's go back. Let's go back to that case study analysis. All right, so we're gonna start with this brand Flyby. And there's a slide before this, but I'll dictate it to you. It's okay. So Flyby is this massage gun, this beautiful massage gun, and there's also some incredible electrolyte pills and some other products in the brand that are just fantastic. And there are multiple levers that we pull for each brand as that we take on. So whether it's improving their marketing, the risk appetite around marketing spend, for just e-commerce brands in general, we have the capital and resources to make bigger moves, which would most likely pose a high risk to sellers operating pre-acquisition. And so we can start with this. So one of the levers that we pull here is listing optimization. And so one of the most important things, everyone talks about operational excellence, but how do you really do it? And what does that really mean? So for us at Boosted, one of the tactics we use is organic growth. And how do we do that? So one is listing optimization. So listing refreshes, as we call it. So in this specific case, we're going to talk about Flyby, what we did with it, and what happened after we made that listing optimization. So we actually have a listing refresh team at Boosted that just focuses on this in all of our SKUs at Boosted. So one important thing to note is Amazon comes out with new keywords in brand registry every single Monday. And so you can go in there and see the most updated keywords for your listing and what's trending up, what's trending down. I'm sure Mother's Day gifts is the #1 most searched keyword on Amazon right now. So maybe you want to add that to the front of your title to get an increase in organic ranking. So one example here we have is Flyby. This is an incredible brand that we acquired. And the most incredible part about this is that over the last 6 months, the competition has grown over 20 times. And if you go on Amazon, you look at massage guns, you're going to have 25 pages of massage guns that all look the same, many from the same vendor in China. And so one thing we had to do was increase our organic growth. So what we did was we looked at the listing itself. It wasn't optimized for organic search indexing, and the keywords were not strategically placed, and clearly there was keyword stuffing done for the seller prior. So this is the title. And so if we go to the next page, we can show you here what we did afterwards. So we used Data Dive and a few other incredible tools, and our listing refresh team went in, looked at brand registry and search analytics, and put the highest volume keywords that are not only just the highest volume, but the most converting keywords in the front of the title to increase the ranking juice, and which would then help with organic ranking. And then we take those keywords, put them in the right PPC campaigns to also help, and then bump up the listing. And so, after a certain amount of characters, Amazon actually penalizes your listing. And so we kept it within a certain range with the right keywords. So the ranking juice brought this up to over 7 million. And what's cool about that is that was actually the #1. That was the highest ranking juice that you could possibly get. So if you go to the next slide, just to take a step back here, we not only refreshed the title, we also refreshed the bullets. And so the bullets before this were feature focused. It focused, instead of on supercharge your body or recover anytime, anywhere, it was focused on features. It was focused on it's 3 pounds, or it goes 8,000 RPM, or whatever those features are. That was the focus of this listing. So we went in, we changed all that to benefits focused. And so we wanted to see how that would reflect with the consumers as well. So if we go to the next slide, what we're going to see here right before there, here we go. So after changing the bullets, we obviously changed the image on the left is before the refresh, image on the right is after. So again, benefits focused. And so it's all about customizing your recovery. What do these heads mean? What do they do? What parts of your body do they help? So you can see there's a big difference here in what the image was before and after. There's more color. It's more branded to the actual product and packaging. So if we go to the next image, this as well, supercharge your body. So we're taking those points that were in the bullets, also putting them in the images. Again, we're electrifying that gun. We're making it much more benefit focused for the consumer here. So let's go to the next one. So this is pretty cool. So these are the results. So we kind of look at things on a 60 or 90-day trailing basis to see how it was over time. What was the success of this listing refresh? So if we look, this was October 25th, 2021. It was selling about 96 units a day. And the day of the listing refresh, sometimes the listing will go down because of new keywords that you put in. It's totally normal. It comes back. You can get it back up within the same day. And then it will most likely decrease in sales as well, either the same day or the next day, because Amazon is reindexing. So what's pretty cool here is we did see a decrease, maybe a few units the next day, and then you can see the increase of units velocity per day over time, all the way down to November 5th. There was like 156, 150 units. So it was a massive increase here. It's purely organic growth. So if you go to the next slide. So this is the Keepa data. Doesn't get more real than this. Again, same date range. We're looking October 24th. That was the day of the refresh right over there. And you can see the BSR consistently going down, and this absolutely crushed it. So this is what we do at Boosted. We take the listings that we buy, we immediately optimize them with the listing refresh team, and then constantly see more organic growth compared to what was there pre-acquisition. So let's go to the next slide. And yeah, actually, so that's my presentation. This is a funny GIF with Kim just kind of spreading her dollar bills up there, but and that's what our goal is just constant growth with all of our brands. So yeah, thank you for listening.
Thank you, Jared. Appreciate that. Again, keep the questions coming, folks, and we'll move to our last speaker before the panel session. Welcoming Jakub, please, from Berlin Brands Group. Over to you.
Thank you, Emmett. Hi guys, my name is Jakub. I'm the VP of Global Marketing in BBG, Berlin Brands Group, a D2C company, direct-to-consumer company established in 2005 already in the space of Amazon and the web shops. And so besides being the aggregator on the M&A space, we are also proud to have our own brands and be selling those in more than 20 countries, and also through the platform of more than 70 shops to warehouses, in-house marketing team. So let me talk to you about a marketing strategy, a bit hands-on. How do we actually steer our marketing campaigns towards profitability? We can move on, please. 2 slides forward, 1, 2, and 1 more, please. And I'd like to discuss this one, or maybe the previous one, please. The first step, what we usually do with the M&A guys, once we sign a deal, we are trying to talk usually about the strategy, about the long-term strategy. Here on the slide, I just, for an example, highlighted 2025. That's not always the one here, but we usually look forward where we can bring the brand which we acquired in the long run. Just an example here is a 10 million target where we want to get. But of course, it's more digestible to bring that down to little steps here, being a yearly step for 2022. Let's say if we generate 1 million after overtaking the brand, then we can generate 2 million next year, thanks to the scaling of the brand, and so on and so on. This plan now looks much more realistic. So we are trying to define how we get to the strategy goal on a yearly level, of course. Shouldn't be a rocket science so far. On the next slide, the things get a bit more complicated or a bit more fun when you're trying to actually set up a monthly target for selling. Why this is important or actually interesting is that you are looking on this question, like how much do I have to generate in money for May 2022? That will bring me to fulfill the target of the 2022. That will bring me to the future, to the long-term strategy of 2025, let's say. So it's really this one thing when you're looking on a small steps which add up to a bigger strategy. On the next slide, the things get even more funny when you start tracking the things on a daily level. And here is the where the smart operations kick in from marketing side. This is actually our daily bread and butter. We have a daily target to reach so that we know if we are on a track to actually meet the monthly target. Usually and ideally, the target is not linear, so we are trying to also copy the past or the history and just try to understand if the things are going well. Are we getting there? On the next slide, where the complexity kicks in, and really the fun begins here, is that the revenue generated per day usually consists of several channels which brought that revenue to us. For marketing, or from marketing perspective, we are managing, I would say, around 10 channels. But you have to imagine that these 10 channels, that's also for the whole portfolio, but that's complicated on a level when you are trying to track it on a company level, on a brand level, and then on a country level as well. So here you have to be really smart to what detail you want to go. And here the data analysis or data ninjas from our company kick in, that we are able to understand the high level picture, but also deep dive into the daily details. On the next slide, and this is just maybe a visualization of what was said here, but this is just a good framework how our reports actually look like in general, and not all of them, of course. But we are trying to, on the right side, track how much did we earn as of today in this month, month-to-day performance, and if it's really going in the direction where we want it to go on a monthly level. Thanks to that, and I'm now going to jump into an example, we can see from, for example, from this slide, that we generated 106 revenue. So it seems like we are over the target by 6,000. But that's just part of the story. The other part is that, of course, you have to pay for some kind of advertising, and that's the red table in the center, which says that we actually, yes, we overinvested slightly. We overinvested 3K in order to gain 6K revenue. Is that a good performance? Seems like, I paid 3 to get 6, but that's just part of the story, which you need to understand if it's really profitable or not. So if we are moving to the next slide, and I'm sorry if I'll be boring you a bit with financials here, maybe you would have expected some blockchain or NFT topics from marketing perspective, but it really gets down back to understanding the core financials of the company, of the portfolio, of the brand itself. If you overinvest somewhere to bring the revenue, that's the right part of the table, the black table. You see that we generated 106 revenue, let's say, but thanks to overspending on marketing level, unfortunately, the final EBITDA or the final net profit on our side is not greater compared to the state if we didn't do anything. So because we increased the revenue, there are some variable costs increasing with us. We didn't meet our marketing target. So at the end, we shouldn't have to do it if our target is EBITDA or the net profit at the end. And the things can get even worse. On the next slide, there is an example what could happen actually if you combine overspending on marketing and overspending on sales. So we are investing your margin here. You could actually on top line, it seems like you generated money on top, but at the bottom line, you are less profitable as if you wouldn't have done anything. So this is something what we learned the hard way, but now incorporated into our daily steering. And I hope this will also help you when some marketer approaches you now trying to bullshit you that the campaigns will bring revenue, but you now know that actually the bottom line is what matters. Thank you.
Excellent. Thank you, Jakub. Okay, so let's move to the Q&A. So the first question in was, does it matter where you put the keywords in the title? And Jared has answered that online, saying the highest converting words mixed with the highest search volume should be first. Okay, so again, we were asked a question, is a recorded version of this available? Yes, absolutely. All our webinars are recorded and made available on the fortiagroup.com. They'll be available in the coming days. So maybe I'll just kick off with a question, and please, panelists, if you can try and give sort of quick answers so we can get through lots of questions in the next 12 minutes. Looking back over the last 6 to 12 months, there's clearly been so much has happened in the aggregation space. In your particular niches, what's been sort of a key lesson learned that you've lived through over that period of time? Does anyone want to jump in and answer that question?
I can start. The biggest lesson learned is that we need to continue adapting our processes, right? Having a playbook is as much of a thought process as it is actual standard operating procedures. And every single technology we build, every single process we build, it needs to adapt as the customer and the market is adapting. So the faster that we can react to that, the more effective we become, and that's what we're focusing on.
Very good. Thanks, Christine. Would the other speakers mind turning on their cameras? Thank you. Jared, were you looking to answer that question, please?
Yeah, sure. So, our focus really has been hyper growth, continuing post acquisition. A lot of these businesses have hyper growth pre-acquisition in the beginning, but with financial responsibility. And so, our investment in automation and increasing organic growth that way has been a huge win for us internally.
Very good. Thank you, Christine and Jared. Okay, so there's questions coming in. First question here is it okay to increase product price when you have 4K plus review? If you have 4,000 plus reviews, is it okay to increase the product price?
So reviews and price really have nothing to do with each other. It's really more about it's great that you have 4,000 reviews. I don't know if it's 1 star, 2 stars, 3, 4, or 5 stars. But in terms of your price, no human can really actually understand what the right price is. And so it's more about your inventory that you have on hand. What are your competitors' pricing points at? Are you running certain deals? Because reviews and price don't really correlate that much together. I would base it more on, what your history has been and what the competitors are selling it for, as an example.
Okay. Thank you, Jared. Another question, what impact do the aggregators expect the very high logistical costs to have for the rest of 2022 and into 2023? Who'd like to take that one?
I can take that one. Oh, go ahead, Jakub.
Yeah, maybe Mike, a quick perspective on that. Of course, that's only part of the problem in today's world, I would say. Yeah? So there are pressures on many other levels as well, and it all gets back to the financial literacy, I would say, if we can afford, how we can afford, how to optimize and where to optimize. So the logistics are rising, but also the other cost lines, unfortunately, not optimal.
Yeah. Christine?
Yeah, I think there's not going to be any less of a headwinds for end of this year in 2022. We're just kind of moving them from one area of the supply chain to the other, and we're seeing that increasing costs as a result. One thing that we're focusing on is when we're launching new products, thinking about high margin, more niche products in undersaturated categories versus more lower price point, more commodity based products. So as you're thinking about expanding your portfolio, think about long term what the customers are looking for in each category and how you can present a more value added product.
Great. Christine, we'll stick with you. Specific questions for you. What are the key differences with being successful on Amazon.com when coming from Europe?
That's a good question. I would say in general, the Amazon.com is more of a competitive market and more of a picky customer. Often when we reverse the other way around, we find that our product that might be, number 2 or number 3 in reviews in our category and review count and star rating, we're by far number 1 in all of the other markets. So in terms of a customer perspective, like I think in the US, it's especially important to present your value add to the customer because there's a lot of choice in the US market, right? So focus on making sure that you have a great brand story, that you have great content, that your product is discoverable in all of the key relevant key terms. That's even more important given the amount of competition in the US comparatively.
Great. Thank you, Christine. Taha, question for you. What are your big predictions in your specific domain? What are you seeing for the rest of 2022? What advice and predictions can you give to sellers?
No, great question. I think one of the areas that we're looking at as a kind of strategic bet is channel diversification. So we're definitely seeing that Amazon is becoming more and more competitive, more and more complicated. And we're seeing great opportunities with channel expansion into D2C and other niche marketplaces. So that's one big theme that we're sort of following through till the end of 2022. I think another area that we're exploring is new product development, kind of touching on what Christine also just mentioned, looking for opportunities where there's not as much margin contraction and competition in categories where new product development can be facilitated in a short life cycle.
Go back to your first answer there, Taha. Obviously, Amazon had a big announcement out this week, Buy with Prime, which is interesting from a FBA perspective and D2C perspective. What impact do you think that has on FBA sellers and aggregators?
Yeah, a great question. I think Amazon has obviously been quite strategic with its timing of the move, as well as some people remember many years ago they sunset a service that was providing a very similar sort of a service to D2C sellers. I think in the longer term, Amazon is going to operationalize this as a revenue center and enable sellers to have multi-channel fulfillment and payments in a more seamless way than it does at the moment. So yeah, I see it as overall a net win for sellers and maybe possibly a headwind for Shopify and WooCommerce.
Great, thank you. Roughly how many operations employees per brand doing circa 1 million or 2 million revenue per year? So how many operational type employees per small brand? Or what's your brand employee to brand ratio maybe?
I would again get it back to the financials. Yeah, as much as your P&L statement can handle, right? The personal cost is the fixed cost within that one, so it's important to realize and actually maybe plan the variables first and then see how much can I afford to have those people. It can be managed by 1, it's super effective. Yeah, it can be managed by 10 as well. I don't think there is a specific answer to that.
Jakub, are you an accountant or a marketing expert? Excellent. Okay. For those brands already set up on Amazon.com with 3PL infrastructure in the States, how big of an opportunity is Walmart? And should it be a low-hanging fruit priority for established sellers? Who'd like to take that?
I can take that. In terms of overall market share, Walmart is about 5 to 10% comparatively to Amazon right now. But you have to consider that when it comes to Walmart, it's a very junior marketplace. There isn't as many regulations about reviews, reaching out to customer engagement. You're competing against a much less saturated space. So depending on the demand of the product on Walmart, you can see as much as 1/3 of your sales on Walmart.com. It's an immense opportunity.
Very good. Thank you, Christine. Any other comments on that question? Okay, a question direct to BBG. How do you calculate your estimated investments in marketing, and how do you calculate your targets on a monthly basis? Where are those numbers coming from? For marketing, is it just 50% of the sales?
Yeah, exactly. That's a very good question. So there is direct collaboration with our sales department and purchasing department, who knows how much the market should be able to absorb from our products for our categories, I would say. So we do this planning on category level, sometimes even SKU level, in the market. And then we know what's our revenue potential. And towards that, marketing tries to adapt the activities. And we then go channel by channel. So we know that, for example, if we want to achieve 1 million, then half of that needs to go through Google paid advertising, where we pay, I don't know, 20% CRR ratio. Then you add it up to the costs, submit, of course, to the finance and controlling department, get cut off 20% of those, and you try to optimize where you can. So there is direct collaboration between finance and sales, and I think this has to be always highlighted. Yeah.
2 more questions with yes/no answers from each of you, please. The first is: have any of you acquired a DTC only brand? And maybe put your hand up if you have.
I'll say something about this a little more than a yes for 2 seconds. So Boosted acquired Fox eBay, which is a $32 million acquisition this year, with 750 affiliates and social influencers. So it was an acqui-hire too, which was pretty cool. And then Boosted's CTO, which is Juan Paulo Ramirez, who we hired from Goop, pretty much looked it over and did some incredible, SEO performance on that. And we brought them onto Amazon and did some really fun stuff there and pretty much crushed it on that one. But that was a huge acquisition for us.
Great. Thank you, Jared. Final question before we finish. Do any of the aggregators currently use Datahawk? Maybe hands up if you use Datahawk. 4 out of 4. Okay, excellent. Well, that's all we have time for today, folks. I'd like to thank Christine, Taha, Jared, and Jakub for participating in today's webinar. It was great to do a deep dive on smart operations. Again, the recording will be available in the coming days on the fortiagroup.com. Thanks again for your time, everybody. Have a lovely day.
Thank you.
Thank you.